So a couple months ago, I stumbled upon one of these stock market doom and gloom websites, Banyan Hill, where they talk about experts with, some sort of special ability to predict the next big stock market crash. And it's going to happen on August 1st. And you got to keep up on this information by paying $47 for a subscription to a newsletter or something. Then, I guess they'll give you advance notice of the next stock market crash. Heck, maybe they can give you advance notice about what lottery numbers to pick. But imagine that. You get advance notice of an August 1st stock market crash, then you can pull all your money to safety. Who knew investing was that easy? But unfortunately, as I discovered, I should have saved a screenshot of when it said crash August 1st. August rolled around, nothing happened, then it became crash September 1st. Then after September came and went, nothing came to pass, then it became crash October 1st. What the hell? They keep moving the goalposts. Call me judgmental, but me thinks somebody is just pulling dates out of their ass to sell literature. And by the way, September 1st wasn't even a stock market trading day. Oops. And this isn't the first time I've bumped into one of these doom and gloom headlines with videos where they're trying to sell you something. My favorite was Newsmax, billionaires dumping stocks, economist knows why. I mean, if ever a headline would make you want to sell off all your stocks at the opening of trading and pay $47 for their advice, that was it. Unfortunately, stocks have since gone up over 100%. But so it's been said that the way to sell something to somebody is to scare them. That's because it's built into our DNA. People fear losing money more than they love making money. And so the people who sell newsletters, they know how to hook you in, especially you inexperienced investors who are ignorant of some of the most basic things like how to reduce risk through diversification into bonds, ignorant of all the evidence, studies and advice from experts that market timing doesn't work over time. And people are ignorant that investing is simple, not complicated. All you have to do is pick 2 low-cost, tax-efficient index funds. Nothing wrong with owning a total stock market index fund and a total bond market index fund. It doesn't require a collection of experts to hold your hand. But anyway, so I was curious about this company, and so I watched this YouTube video about what they do.
As investors, it's a sure bet we will get hit by financial hurricanes. It is not a matter of if a crisis will strike, it's only a matter of when.
Okay, I'm diversified into bonds, so why should I be concerned?
To survive and prosper no matter what happens, Banyan Hill Publishing is your new home for financial guidance.
I can give you financial guidance in 2 seconds. Mitigate stock market risk by diversifying into bonds.
We are a network of global experts in asset protection, investing, and entrepreneurship.
So this is what the financial industry loves to do. They want you to think that investing is complicated. It isn't.
You really only have 2 choices when it comes to investing and asset protection. Choice 1 is to go to a financial advisor who peddles his company's plain vanilla advice, charging you exorbitant fees every step of the way.
Straw man argument. You should never go to an asset manager that they charge you quarter after quarter, year after year. If you do need help, then you want to go to a fee-only fiduciary on a one-time, one-task, or hourly basis to come up with your financial game plan. Then after that, you don't need Mr. Advisor to continually hold your hand. And as far as plain and vanilla advice, plain and vanilla is a good thing. If Mr. Advisor tells you to invest in 2 index funds, then you have found an advisor who is giving you great advice.
Choice 2 is to invest on your own without any help at all and try to navigate the tumultuous markets on top of everything else you do.
Yeah. So there they go, trying to suggest that investing is complicated and you have to navigate it. Nonsense. The only navigating you do is to percentage rebalance your two index funds.
Both of these choices are unacceptable and dangerous.
You know what's unacceptable and dangerous is market timing. I have a review of Ken Moraif. Take a look at the losses that Ken Moraif's most recent clients have suffered if they followed his market timing advice note for note since 2009. Missed out on approximately 44.5% in gains by being out of the market at the wrong times and by paying Ken's fees.
We give you the chance to tap into the minds of our esteemed experts and allow you to look over their shoulders at their model portfolios.
Model portfolios. I haven't seen their model portfolios, but one of the ways that asset managers are able to keep clients from leaving is to have a complicated portfolio so that clients feel the need to continually pay Mr. Advisor to constantly manage that complicated portfolio. Because if they told you to invest in two index funds, you would bail on them. Why constantly pay them to manage two index funds?
Each of these experts, along with several others with backgrounds in technical analysis, business management, and financial planning.
Look, you can have all the knowledge in the world about reading charts and have years of experience. So what? Good luck predicting the next stock market crash with an exit point and then a re-entry point that will result in a net gain as compared to if you simply held without selling.
Contribute to Banyan Hill Publishing because they have a desire to help you achieve a higher level of investment returns while reducing your risk.
Whoop-dee-doo! I have a desire to beat the house in Vegas. I have a desire to fly to the moon. Is Banyan Hill actually beating the indexes? And if so, besides having slick advertisements and videos, have any such claims been verified by an independent third party, such as how Gips reviews independent investment firm performance? And whenever I hear someone say that they can get me higher returns with less risk, this for me sounds the alarm bells because low risk and high returns are opposites. If you want higher returns, generally you have to take higher risk. It's that simple. But if you believe otherwise, then maybe you're the kind of person who sight unseen buys a house in Idaho with an ocean view. But the bottom line is there's always something to worry about. If you were to act on all the worry out there in the news and whatnot, chances are you're going to just miss out on gains by being out of the market. So just resist the urge to time the market and instead look at being constantly diversified into stocks and bonds.